This video is going to be an interlude between what we saw in OrderFlow and what we are going to see in the executions part. It's going to be a way of implementing everything that we saw in the previous two OrderFlow videos to a narrative in price, in this case in seconds, in second charts, to see more scenarios more frequently, and so that we can really understand it. I'm not yet interested in just providing you with a mechanical entry model. That despite the fact that in the next execution video, you will have those so-called models, which are like the entry methods that I use the most, that I always use, that I have found most effective. What I want is for you to focus on understanding why things happen. And if all that is clear to you, be assured that you will know where to enter, where to exit, how to interact with the price at any moment, point of the distributions that are taking place, or accumulations, if they manage to build a narrative in favor, and are understanding the order flow of the price. If not, I would just want you to understand that I simply go and tell them to apply the same order flow to make an entry, and that's it. And to do this, to wait for the price to reach an origin touch, it's 30 continue, and to put a trade here at the 50, if I wanted to give them an entry model, like that, just like that, and not learn more, that would be it. But there will come a point where this will be happening to them. They did not understand from which area it started to do something specific, the price here, that suddenly this also came from there. So when you start having those losses, it's when you learn why it's not good to take trades in such a mechanical way. And that's where I also learned from my mistakes, from my lost trades, from those things happening to me over and over again. I understood why the trade was lost, because I focused so much on the structure, and the market changed the structure here, then structure down here, then rise back up here again, and it would do all that to me. But then, with order flow and the previous videos, we understood how to identify those false flips, those false structure changes while staying in an area from which a positioning is being built. We don't want to go against that. In what sense? In looking for shorts from around here. To go down, knowing that from here there is an upward positioning, and that there is always the possibility of a double bottom forming. So well, this video will be to start making that kind of reading of what is happening in a seconds chart. In the next one, I will tell you in detail how to execute and quote-unquote entry models. In fact, this is the one I just showed you. I did this on Tuesday with some news. A complete change of structure in 1 minute happened here. I show it to you here. This is what happened here. Starting at 30. This marked the beginning. With the news, a double bottom formed here. So when the price fell, I took the trade as it aligned perfectly and everything. There are times I act aggressively and take risks, but because of the confidence, let's say that I have considering the scenario. Look, I don't have to be right with a complete move. I took my almost 20 points from that suite of those two logos. All set. I didn't even fight with this Harvey. I end up breaking it, yes, but look at what the price does there. It makes a tap, gives the reaction and goes away. You know that going against an order flow of a narrative, especially when it has already been taken out and reversed in a news area, tells us that the direction is very marked towards that side of the market. In this case, there are the first touches to the levels, to the areas, that reaction from the reaction that was supposed to happen from there. Otherwise, all flip, all structural changes made against that order flow in that direction are simply pullbacks to return to a previous area, to take out a high, to grab some liquidity and continue said order flow. So when I'm trading against a direction, I am aggressive. So when I'm waiting for an entry in favor of an order flow, I wait for certain confirmations. I'm reading what is happening with my markers, the markers I have on the chart, and with my origins, with the help of the first videos, system functions, rejections, failures. With these three things in general, I'm reading everything within my areas, my markers, my origins, and my order areas. That's the set of things I really need to be reading what is happening. So let's start with this day. I'm going to do it from the opening as long as we have good volume, so we don't get too bored with the Asian session gaps. Here, for example, the opening happened and where it starts to react, so you can see at once how to do back testing without having to be placing trades and no longer wondering why things happen. We have an area over here that the price had left at this point, and from its 30 it went away. It just broke this, but it was this rejection right at the opening. So, when the rejection happens, the low of all that displacement law is at risk, and it can take it away. So what expectation do I have at the moment that I see the rejection? From this high, it can be taking these lows, and I don't want to be looking for longs from these things here, right?
The same order flow and the same functions of my system tell me where to avoid trades.
I already know that this area here is where said movement started, so the price falls, effectively takes out the lows, and see how it tries to react from this area too, which is this area here. This area here, in fact. The price had used it. See that it came back to it and left as well. But this one did practically fulfill its function. Although, well, here the touch didn't lead to a continuation, but there was the double bottom pattern. And when an area already has its entire pattern, it's easier for it to end up following it. But see that the same applies to its IPA, which would be the first touch, and it starts action. But it never gives us that flip here. It puts a new low leaving a high, and we never managed to reach that high to say that we would have a chance of a flip. On the contrary, the price was around here, respecting this fractal, which was responsible for taking out the responsible of this area here. Then, in the previous video, we talked about those responsible for bringing the price down, failing to break it, and ending up holding that area. Here, we still haven't mitigated 50% of this area, and a small fractal formed here. Nothing very important yet, but this one is starting to hold the price upward. Well, it's starting to hold the price upward. If I see that the price isn't making new lows, what does that mean? It means the price is failing to create them, and is forming new highs. So, at the moment when the price is here, if I'm reading this narrative, when the price is here and starts going back up, I want to look for... No, I don't want to look for shorts from here because the price failed to make a new low. And on the contrary, when it is usually doing this, it's going to look very marked, like a trend line, when the price is failing to set swing points in one direction. So don't get fixated on looking at areas and wanting to take reactions from them in such a mechanical way, without having a narrative in your favor. Because there are many people who keep watching what the price is doing and they were here. This looks like something responsible for taking us out from here. And then they want to grab this area and they want to chase this bearish inducement that the price is making here. At this moment, it is a bearish one, they want to chase that. Once here, it created this other intermediate area, which is not part of the structure, because our protected low until this moment is here, and the high for the continuation is here. So, this is internal structure. And once they see the price coming back here, they want to chase that. But they forget about everything happening here, about everything that is being built. So again, I am not looking for shorts. And I make a new high. Obviously, I always have to be looking here. And what happened if everything I have here is in the lower time frame? Then I want to move up to a higher time frame to see what happened. And also, if the price gets back in, how is the price closing? So I take advantage of having this here at once. And what we had, I'll be there in 5 minutes. In 5 minutes, this area would become a swing area in 1 minute, where the price left around here, came back to it, and from there, it continued. That is my last area where the price had validated here to make the entire pattern, the tap and the double top to come here. At the moment when the price came here in Asia, in London, it broke the high of this other area. The first tap came here and failed to make a new low, which is risky for me. So when the price is going like this, I don't want to be shorting this whole area here. But I'm still in the area that's doing all of this to me, so I'm really bullish necessarily. Because I keep building a position in that area, the price is going to induce buying until it reaches a point where it's the double top, ready to distribute, or it reaches the limit of the area, as shown in the past videos, where it reaches a limit, a responsible person, or an order flow area, and it doesn't end up taking it, and that's where the price starts to melt down. So I know it's something that goes very much against human logic, because generally, when people start in this, and when one used to make the typical move of chasing the price, strong and FOMO set in wanting to chase, and one would buy, and buy, and buy, and that's when it would turn around. But this is how the price moves, and here we are learning from which areas the price is generating that for me, and the idea is for it to change that chip in us once the chip of understanding how the price does. This changes in us. The trading becomes much better, and the understanding of what is happening. So, well, we stayed in that area, and I'm starting to wait to see if this is really very bearish, until finally it gives me the continuation of that movement. So how is this being built in seconds? All this linear movement you see here when you see a movement with so much displacement in one time frame. This is an imbalance in a higher time frame. In 1 minute, this is an imbalance. Therefore, this pullback is to that imbalance and also to the previous zone. This is the last swing zone that we left. It left that entire imbalance and did not leave even a single S&D along the way. It dropped to its 30%. It tried to give a new push. And here is where it starts to get suspicious. The area itself already starts to fail in giving a new high from the point where it fails to break that order flow zone we saw over there in the higher time frame. So one can start noticing bullish exhaustion. And in these pushes, which previously had so much displacement, look at how each push starts to appear smaller. Here, it's at the 50, and this is what I'm telling you. If the first tap did not give you continuation, this area has not been validated. So, that's the first area that is going to try to get the price to come to one that was already validated and then attempt another push. So, when this happens to you, when you're following the trend in the lower time frame here and ignoring everything to the left, intuitively, you shouldn't be looking for longs once this is happening. If the 30 gave you one attempt and didn't make it, don't want to seek it from the 50 either. It's going to take every level. The 50 tries, the 70 tries. There's absolutely no fractal in the levels, and it ends up taking that one. Now that it's touching what we had here, the area where we touched the 30%, in the same way, I'm going to show you the entry that says over here, look at how it also worked, because it took this and not the origin that we have around here. There must have been some candle pattern in 1 minute, because what happened here is that there was already a tap from its 50 and the double floor, and it fulfilled its function. It is completely mitigated. It already made its pattern. It already made its function. So I don't like to take something when it is already so mitigated. When I take these trades from the origins, I like that it has its 30% mitigated, the price is gone, and comes back to 50. That's how I like taking them more. But when it's like this, I don't like it. But taking advantage of the price that turned out to be worth it, it would be on the way. Look how it reaches 50. Now, again, it goes back and repeats. Who was responsible for taking this out? It would be here. What's going on? Here, with his hay. He doesn't take it out. He doesn't take it out because of a tick. It left. It arrived at its country and didn't take it out. If he doesn't open that door, everything is at risk. I'm around here. I don't want to be looking for him from there. And it comes and finally takes that. Now look how curious. Despite the fact that the origin was already mitigated, even though that origin was already mitigated, there's the low look that it still sweeps all of this. That must have been just a tap in a higher time frame, while all this movement was developing, and it still kept the low from its origin. So look at the precision that the price sweeps, touches, and respecting the order flow area from which it was generated. But what happens here? I'm left with a responsibility for this swing in this time frame, and the price does not open that door for me, then making me a candle pattern in a lower time frame. And as I'm reading then, what goes on, like quickly, For example here, it sweeps this low many times. It happens when it makes false flips, that it comes, makes an attempt, doesn't achieve it, comes and sweeps the low, or to touch an imbalance below that low, and then it goes. So, what do I expect? What function does a rejection have? And in addition to that, a double bottom, taking out the high, what happens when it makes a move? It goes and keeps falling. What is the price trying to tell me? The bullish is failing to fulfill its function, and the bearish is distributing. Additionally, if we go very into detail and take this as the flip I was telling you about, which is this small fractal here, this small fractal here, that's what it is. Responsible for having taken out this wolf. And look how the price made the impulse to him. It didn't break it either. And we kept going, until it gets out. The price melts. It's an entry that I do a lot, on very trending days, as it was precisely this week, with sell stops. So, if I already have an idea that I want to take a short, and I don't want to be risky from this, I don't want to be risky from this responsible, I know that the price is giving me a more bullish impulse, so I put a sell stop below the low in such a way that if it fails, in general this starts to go super strong. Everything when it keeps falling, it activates the order, and I go with that, and this when it happens aggressively, let's say here, it gives me an advantage when making the push that it's doing, and then it comes and triggers the order for me. This area that it will leave will usually become responsible if the movement is a good displacement. Therefore, it triggers the order and gives me a stop loss right away, so I will know where it will be. Obviously, it will depend on the size of the area as well. If this is very small, like 3 points, I prefer protecting myself over here above this responsible area, which is where this upward trend failure started to occur. Because, well, I generally allow myself a 10-point stop loss, so to avoid any additional wicks and such. But when that order activates and moves, I already know that whatever it leaves here is a responsible area, and if we break this, then I'm already acting with the executions in my favor, ensuring that I'm not guessing whether to go short from an area, but rather going with what is happening with a failure, and that failure leaves me an important area that can protect me. In fact, after we break, this fractal is created, which is after breaking. Therefore, this one is not responsible. And look how then it ends up taking it over here. This becomes a trap, and it ends up taking it to now mitigate a bit that responsible that I had left unmitigated. Now the same logic we used up here didn't remove the responsible one because of a tick that happened here with this one there. Then look, the price is trying to give a boost from the area generated at this time frame. 50% is trying to make a distribution, and already being at the origin gully, which is at risk. Again, everything around here to do shorts. This, there can be taken. Here comes the leader. Look at the line. Feel the excitement. Altic is respecting it. What happened here when he respected the responsible tiger? He takes everything. Usually the price from these apparent bullish areas will be again the same as what we saw up there. It will be an attempt at an impulse. Notice that here a fractal remained, a small accumulation that could have been responsible for taking out this high. The price tried to make an impulse from it. It didn't succeed. He left, when this is very clear, when the more apparent, responsible, not as small as this rectal, I usually do the same if I'm already in an area from which I wanted to take a trade. Let's say this, and the price fails to break it. My temporary order flow changes. Quick. What is the responsible break at least to make a deeper entry into the range, or go almost to the origin? Then when I see that the price reaches to be responsible and starts to be an attempt to leave, if I see that the price is falling again, I usually leave a sell stop somewhere around here at the load of that responsible in such a way that it activates it and goes away. Then it breaks that, and therefore in theory I would leave a responsible for breaking. A responsible price comes around here and does the pulvaga. To that said, responsible, and look at that wick. Such a good reaction. This is very good to see when we are going in favor of an order flow, but of those taps in an interesting area, an area from which we want to take an entry, and we see a touch, and that reaction. This is very positive, and it keeps breaking and breaking and breaking until it ends up taking everything. Well, here it already shows a very linear drop. Well, this is where I had shown you the entrance then. Here it broke the range. Leave this new swing. When the price is very directional, like we talked about in market profiles, when it has a very clear direction and is chasing a target. In this case, the target was to take out the low of the news candle to hit the 50. The price is usually very reactive to previous responsibles, or to 30% of a swing. In this case, it quickly hits that 30% and goes straight to completing the objective of a nearby induction. And it comes to take all this out. This is very dangerous. When you see this, do not start chasing the price. If you see this, and a small structure forming in such an algorithmic direction, don't continue shorting it, because there will come a point where the price will devour all that it was doing with great force, simply to take out all that liquidity and all those who were selling there. That is a sign of exhaustion. That is a sign that a counterparty is now needed to continue filling bearish orders. Leaves the induction near the 50, which I like. It reaches the 50, and that's where I had taken that little trade. And you took out rejects. This. Therefore, it's an imbalance. Remember what I told you. Every movement. So linear is an imbalance that remained. So when the price is very trend-based, this also usually happens. It tends to give imbalances along the way. And when it starts to accumulate at a certain point, or delays in giving a continuation, or a retracement, what it does is wait precisely for it to close, like that candle of the time frame in which it is leaving an imbalance, and it comes to take the closest fractal, before touching the imbalance to take that liquidity from there, to touch the imbalance and to continue. Well, here without further ado. And everything happened very quickly. For example, in this fractal, it abandoned it and did not touch the 30. It continued, but rejected the low. Therefore, it can touch the high. It touches. It takes it out, and touches the 50. This is happening very quickly. You know, it works the same way in 1 second, in 5 seconds everywhere. It's just that we take advantage of it in seconds to have more samples and opportunities in a day. And you can make the most of this system and not have to be as restricted as with other systems, waiting hours for a setup that probably fails, because that one can always fail. An entry can fail on me. I take stop loss, obviously, but I'm not interested because I have a lot of confidence in my system,
and in the number of opportunities it gives me. So that's a huge advantage.
And they highlight the psychological factor that this system offers us. Well, check out this suite that was made here to generate this area was to come and touch the responsible, because this is the responsible, because it is not, because the price fell, it hit the low, and only then did it start to rise. This fractal that was generated after breaking is not responsible, because it is after breaking, meaning it is not responsible for breaking something. The one responsible for breaking was this one. It was the one that generated that movement to give us that continuation. Well, it came here, hit this, rejected it super well to touch the responsible, and generated this swing, and continued. We reach a point where the order flow starts to change a bit around here. Look at how the price starts to behave when it wants to go higher. In this case, it's the same logic we were using a while ago. What's happening here? What's the area from which this last movement is generated? It's here. It comes to its responsible to break the low, doesn't break it and starts falling, and 30% of the area with the responsible well. And it comes here, makes an attempt to push from this previous area. Nothing happens. You know that an area that is not validated is the first one to avoid. If an area is not responsible for anything, it is not an origin, and it is not validated by order flow. Those are the areas you are going to avoid. Those are the areas you are going to aim at as a target, as a price magnet. But do not be aggressive from them, because they are the ones that are most at risk. They are areas that have not shown you that they are generating any positioning from them. They failed to break the high. What follows is this pullback to this small fractal, which in fact, look, it's the one responsible for taking out the previous area. See, look how everything connects. And from there, now it does come to touch the 50. It does come to touch the 50, causing the tap and the double top. If the pattern is already complete, the price has to continue. But what happens is, it fails at the last moment when they are close to the origin and doesn't break it. This is what I want to avoid when the price is making this movement against me. I want to avoid taking more shorts because the price already failed in setting that new low. It could be taking all of this down from here. I don't want to be chasing if I didn't take a quick entry from over here. I don't want to be shorting when the price has already retested the origin of this movement and failed to break it. The price is a pullback, much higher up. It came to where this whole movement started. Look here at how it applies. Again, the responsible ones. If this is my area that is building this pro-bearish order, in what does this area turn into? The responsible one. To temporarily change this order, flow up to this moment. And this comes and takes all that. Probably the price touched around here. An imbalance of a greater time frame. Or I don't know if this was responsible for taking something out around here to the left. But anyway, let's focus on this. The price comes, making this retracement. Tests. This responsible one. Doesn't break it. Starts to give a reaction. But that impulse failed and ended up taking him here. Here's the one responsible. The origin of that movement. This, the origin of all this impulse. All of this upward impulse. This law of displacement. It's around here where the flip ended up. And the flip from that origin is the next door. This touches, Here the 50. Retracement. Well, it keeps falling. Very bearish. It looks very bearish. Up to this point. And in this second impulse, it can't give a continuation. It takes out the low, rejects me, and starts to rise, and starts here. This is where that battle of order flow begins. That was generated from the fractal, responsible for taking out this one. And from this origin, it starts to accumulate a little. Who ends up winning the bullish ones? Leave us all this area. Here responsible for taking out this movement, and the price starts to move away again. Look how it starts to show a change in order flow. What peculiarity. There are failures in breaking of the order flow area, leaves us responsible on the way, and this is how the price starts to go. Well, let's see what else is around here. We reach the area again. The one whose responsible we had used is the one who had swiped this trap, fractal generated, after breaking to touch the responsible. And from there, we started to have movement. Look at how strong movements occur from key areas. Everything that is generated small along the way, or intermediate in the price, is what ends up being swiped in both directions. So, that's why I really like to keep past areas that have served several times, that have given me a positioning in the direction, because eventually when the price gets back there, you usually get good reactions. So, already applying some multi-temporality, I know that this is a high of higher temporality, this is a low of higher temporality, this is a high of higher temporality. I had already abandoned the swing of a complete swing of higher temporality, here had broken with a wick. Not from a very deep lung, but from the mid area, mid continuity, up to here, and here starts again, certain accumulation, a certain price struggle, because there is an order flow up to this point. The yes is fighting now, with an area that was important in this temporality, in the past. Well, there it hit the 30. That, here hadn't touched it yet. Here it still hasn't hit the 50. Then the price gets here. That starts to make. Once it hits the 30, look at how I'm making clean impulses. And it comes to a point where the impulses are losing strength. It returns to a previous area, to this failure in breaking table area. This wolf had validated this area with this continuation. And look at how it took it to come here now to this other area that also had validated this wolf. Makes a push, the double deck tab is there. What's the function of the double deck tab? From this area, starting from this, and from its 50%, what's the function of that? Distribute. It gets to be call high. And what happened? I'm doing it again. What impulses? Impulses. Impulses. It gets here. It doesn't give me an impulse. Since the previous fractal, it comes to the area where that fractal was generated. It swipes me to the first tab, tries to make an impulse again, and then it goes away. That's when I place the stops. Again, I place a sun stop below this, if I see it is failing. Knowing this will change the order flow, making me responsible. It will also give me a decent scalp. We arrived at 30, where the person in charge is,
But that person in charge, along with the 30, can't overcome the previous area. So if the price isn't giving me new hikes that we talked about when this is looking like a trend line, if the price starts to fall again, I won't look for more longs from here, from this displacement line. I'll let it go and keep going until it gives me confirmation here. Now it's taking the first fractal, then the second. The second one was generated from this one, and this one also from this. Yes, it's now covering all ordered areas. What can I expect? And on top of that, from the 50 of the previous swing of higher time frame, that now did make that change in order flow. So I won't rush to look for longs if the price isn't making new highs. Well, it finally ends up going higher to test another previous zone. And look again. The peculiarity we saw over here when it started to fall hard gives a movement with a lot of displacement that starts to happen up here. This area is generated, and from it, a continuation is given. So, it's my validated area. The price retreats here, makes an attempt to continue, fails, which is dangerous. This low takes it. It reaches 50, gives a small reaction, and doesn't make it. We are coming off a failure to set a new high from a double bottom here, and it starts taking everything until it takes out the area that had validated the price for us. And from there, this starts. They start trying impulses from areas that have been validated, in order. Look at their IPA. This first tab, from this responsible person, makes another attempt of impulse. And again, it tries to go down. It doesn't succeed. Comes to look for something higher. What is the responsible person looking to take? Said responsible person. That one tries again, but doesn't succeed. And look how this order fight starts. This small area, the price returned to it, and God next. And this is where what I tell you happens with order flow moving up and down, but everything is from specific areas that are happening. Well, this is the first tap to this area, and see how it draws the first tap from the bearish delivery, from this responsible, but it keeps protecting the low of the area from which it was generated. I don't want to look for shorts from this, as if it were a bearish flip. If it didn't give me that last confirmation that I needed, which was to break the area that generated said move, then the price gives a small reaction from the responsible, but ends up taking it out, because what we have is the tap, double bottom, and it comes to mitigate higher. If it breaks the responsible, then what follows is the direction of that. This is the origin, is the last opposite movement of the swing zone in this time frame. 50% starts accumulating very good signal. I love it when the price starts doing this as a level, and now it goes back and gives movement, and look what happens. When it now takes the low of that area that was supporting the price, it's the first thing it takes out. The responsible we left on this path of what? Of taking out this high, of taking out this other responsible. So if everything is already aligned in favor of the order, the direction flows. That's the one we have to remove, wait for the price to take out, to start saying, alright, this is going to be seen, if in the whole movement it didn't leave any fractal out. So, that flip I do with the responsible becomes like the responsible area to take out. Said responsible comes back from this origin from its 50, goes to the 50 of this, and goes away breaking the swing.
Look at the precision of how the price is doing it in 5 seconds. So if there's no algorithm behind this, I don't know what it is, honestly. It's hard, isn't it? After seeing it once, you've seen it happen so many times that you're left with an area responsible for having changed all that order flow for me. And this swing area returns to its 30%, and in turn to 30% of the responsible, since one touch was not enough to make a flip in this time frame of these small lows. So it went to touch the responsibles. This is another entry that I usually make, an engulfing, if the price is doing to me this trend line, an engulfing, that takes at least the last candle that made a high for me. In this case, a sell stop below this candle can be a good entry if I have confidence in that direction. And the rest of the entries I made this week were actually like this, with sell stops, in charge of what was going to be the creation of a person in charge. It's like assuming that a person in charge is already going to be created. So the price throws me off, because it's going to happen. So then it left an order. Then from this origin, it came to test over here. Now, the origin of that area, because it breaks the person in charge. This person in charge then follows the origin and is less of a person in charge to break the person in charge who attempts to rise but ends up taking it. Therefore, I have that. The person in charge breaks said person in charge, just as it happened here, to align the lower time frame again with what is happening in the higher time frame. It returns to its 30%. And over here starts again a small struggle of order. We have this area from which this high is generated that comes to test. The 50 continues, comes and sweeps it, and the double bottom is generated. And that gives us the pullback to come now to this person in charge. And now this one that covers the double top. So whoever wins from here, it gives us a good indication of where the direction is. If I had a hard time understanding that the entire narrative came in the greater temporality of this, and that here we return to the entire previous range in this pullback of the 11 and 11 here. Yes, it was hard for me to see that in this pullback we were already back in this entire range here. In fact, we had taken out this low. Look, we were back at 50% of this. Yes, it was hard for me to see that we were already in the optimal zone of higher time frame. To understand that everything was aligning bearish. Then I have another opportunity, which is to take out this area and understand that the bullish is not fulfilling its function, and the bearish, there's a double bottom, there's a double top. There are a lot of people here who are going to get confused and go crazy because they are seeing both things in both directions, but I'm already showing them how a whole narrative is being built, step by step, multi-time frame. If I leave a swing of higher time frame, what do I expect when the price starts to accumulate and make a pullback? That I am getting a pullback of that higher time frame. I'm not going to rush to start entering, knowing that this pullback of the higher time frame is going to take time. And look here, how what we saw with the false responsible applies. Again, this area was generated afterwards, after having broken this whole swing area. So this is not the responsible one? Where is the real responsible here? This is our responsible one, which is in 50% of that whole swing area that we have. Look how the price from there comes and continues. And then it comes and takes out that area again, and then goes and takes it out again. So if we understand order flow,
we will never have to worry about structure again, because otherwise the price will drive us crazy, making structure changes in all directions. So, from this area, which is the trap area, it comes and tries like this impulse, which failed. And if it failed to give that continuation, it ends up taking the hype, giving a good rejection, indicating a good downward trend. And well then, look here, the one responsible stayed. Of what? Of taking out that area we said was important for order, and what happened a while after? After we followed up on where the price went, I repeat, areas that I have marked as important, I will save for later because they will be a good target once I get confirmation of a flow changer in the opposite direction, and it will be a good point to consider again. So the risk comes when the price, making small pushes, hits a point and tries a new attempt. It may fail, leading to a larger movement. I want this reading you just saw in the price to guide your actions, hopefully and preferably in seconds, so that you can gain more experience seeing the chart, that you can gain more experience faster, and thus lose the ability to see more trades in the same session, and that allows you to not feel worried, because you are not finding anything and everything that what other systems have as deficiencies. Well, actually, I wanted to explain more to you, day by day, session by session, but you see everything that takes me, explaining all the order flow of a small zone, and I am currently seeing the entire session in 5 seconds, and I've been seeing the exact same thing every day for months and months and months, all the sessions in seconds. So that's why I want to share this, because with this same logic of flow, order, areas, failures, and compliance functions, you will understand absolutely everything, just like it was this week, just like that. From an overall perspective, with multi-temporality, I had a very bearish bias from about here, from after how Monday closed, when this other impulse was tried before launch, and it failed, and the market closed here below. I had a very bearish bias because it closed here in an hour, starting from the range where a structure change occurred on a higher time frame, and due to intuition, earnings are approaching, so the Nasdaq does this a lot and manipulates it this way before important news, before important earnings reports. They often create a huge discount, and when the news actually arrives and everyone is induced to sell, then it really starts to the rise again, if the reports are going to be positive. And already throughout the week, this Wednesday's candle then closed all the daily imbalances. So now I had some targets here, and since Tuesday, in fact, I had my eye on this area for a very long time, because it was generated after the previous CPI in June, and the price had already adjusted by 30%. Look how it bounces back, applies again, and there was also an origin where there was a candle pattern, and it was like a good target to complete, and it just touched the 50% after the whole drop, and there it reached. So, go read the price with everything you've just seen in this video. I know the information can be a bit dense, but you will notice that I always repeat the same thing everywhere. Price fails at this, price reaches such and such point, applying a bit of multi-temporality, And really, you won't need anything else beyond the experience in fundamental contexts as well, because you need to have some knowledge of how the stock market works, tech stocks and all that. What macroeconomic situations influence us so we won't be taken by surprise by a sudden drop at the opening? Unprecedented like this and very linear, just like it was in London. So that we won't be caught off guard by these kinds of things one day or another, which rarely happens. Also being informed about other aspects like the fundamental side and news. But more than 90% of the time, the market moves in the same way, as long as there's nothing terrifying or something that generates too much hype. And euphoria in the market will be moving in the same way. Already on the way, generating areas of order flow. Here, it generated 30%. You can see the price, then this double top before an opening. This was also super easy. Then it continued on the way, giving this continuation. And look, again it takes the low, takes the high, takes the low, takes the high, takes the low, and so on. But in reality, what is happening? It gave me a tap and a double top. This happened in Asia and London. Well, that's another topic. Asia will leave something in the price, and when it reaches New York and the opening, small things that were left over there get taken away. This is something you will see in more detail in other videos, but the theory is the same. An area was generated that was worth the price, and from there, the double top pattern was formed, and the week's distribution ended just like here, above double top. And so I hope all this has helped you a lot. The next video will be specifically of executions, and a final video that I'm sure will also be very useful to you.